As I've mentioned in past videos, I do invest heavily in the stock market, and man, are my returns exploding right now. I know it's just kind of on paper, it's not going to be real. The average over the years is hopefully going to be between 4 and 7%, but right now I'm up over 27% on my portfolio. Now I don't invest in individual stocks. I buy ETFs. I know there are some risks around ETFs. How are they efficiently priced? Do they really track their underlying asset? Or are they based on the demand for that specific ETF? I really don't know the answer to that, but the risk is limited to a certain extent. So the way my portfolio shakes out is I'm 30% in stocks, I'm 40% in long-term treasuries and bonds, 15% in intermediate bonds, 7.5% each in gold and other commodities. The 5 ETFs that I use, one is VOO, 30% of my portfolio is in there. VGLT is my long-term treasury holding, and I'm 40% in that. My intermediate bonds is IEF, I'm 15% in IEF. And then my gold holdings is in IAU, and I'm 7.5% in that. And then DBC is my commodities index, which I'm 7.5% in that. So all of these, and I try to rebalance one time a year. I don't care about timing the market at all. I don't try to compete with the hedge funds and the other superstar traders. I know I can't compete with them. And because I don't think that I can beat them, I just don't try to compete with them. So I don't time the market. I put a fixed amount of money into my investments every month. Therefore, if the price goes down, that fixed amount has more buying power. If the price goes up, I have less buying power. So I buy less at a higher price and I buy more at a lower price, and I never sell, no matter what. Unless I have to in order to rebalance. If it's very unbalanced at the end of the year, then if I have to sell, I will, but I really don't like to. That's not what they're there for. It's not there for disposable income, it's there for an investment. I did kind of break my rules in the recent downturn a couple months ago with the COVID-19 situation. I did get a little skewed in my balance towards VOO, towards the Vanguard S&P 500 index fund, because stocks were just so cheap at that point. And that's one of the reasons why I've been able to get such a high return in such a short amount of time. So I hope that helps, hope that clarifies things. If you take one thing out of this video is, if you're a retail trader, it's extremely hard to compete with the hedge funds and the superstar traders. So don't do it. Don't try to time the market. Yes, prices are high right now, but get in it anyway and take the long-term view. Invest in gold, invest in stocks, treasuries, bonds, and commodities. Spread it out, and you'll be able to weather most storms. So that's it. Hope you enjoyed it, and I'll speak to you on the next one. Take care.